Dalal Street ends in the red. Nifty and sensex see cuts of over 0.5% each. Nifty fails to hold 25,900 level in trade, with nearly 40 stocks ending lower. Mid-caps outperform the blue chips.
The Cipla stock plunges after Umang Vohra expressed his intention not to seek a reappointment as MD and CEO. It appoints Ashin Gupta, its global COO, as the new MD and CEO effective 1st April 2026. Shares of Dr. Reddy's also skid as it received a non-compliance notice from the Canadian drug regulator seeking further information on its proposed launch of generic semaglutide. The expected delay in launch is expected to significantly impact its FY27 sales.
Larsen Toubro shrugs off a Q2 earnings miss due to monsoon impacting execution. The strong order outlook, a key order win in Europe, and a planned foray into precision equipment lifts the stock. Meanwhile, BHEL rallies on a healthy second quarter as margin expands sharply and execution improves.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I'm Mehta, and with me is my colleague Vivek Iyer. Well, Vivek, it turned out to be a session which was weak. We, in fact, slipped below that 25,900 mark for the Nifty, but the mid-cap index was fairly resilient as compared to the Nifty. That ended absolutely flat with a little bit of a negative bias, and we had an advanced decline ratio, however, which was on the declining side. The Bank Nifty also under pressure today, so down around 0.6%.
That's right. Good afternoon, Ekta. Like you mentioned, a session which was mostly dominated by the fact that you had so many results reactions. Yesterday, capital good heavyweight L&T declared its results while the results were released. And like we mentioned, the very strong order outlook and the order inflow that the company is likely to exceed their own guidance is something that the street clearly liked. A BHEL, very strong results there. So that particular stock did quite well. But here's the lineup of what we have in store for you today. We start with the top movers and shakers of the day with Winnie. The stocks of the day were Cipla, L&T and Vodafone Idea. And stay tuned as we tell you why these stocks were buzzing in trade. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. Well, now to our first segment of the day. Winnie joins us now from the big wall with the top movers and shakers of the day. Winnie, over to you.
Hi, thank you so much for that, Vivek. Now, talking about the top movers for the day, let's talk about some of the earnings candidate. And we have PB Fintech, strong operational performance in Q2. EBITDA margins came up, significant rise over there as well. It was at 10% versus 5% previously. Sagility, strong numbers came in from the company. The company upgraded their guidance as well in terms of revenue growth as well as the margins of the company. EBITDA margins out they expect for FY26 to end at around 25% plus. Previously, the guidance was 24% plus. Earnings contrast that we're seeing coming in for some of these banks, Canara Bank as well as Union Bank. Now, Canara Bank reported a good Q2 performance this time. The stock was buzzing in trade. Street estimates also is what it beat. But Union Bank, on the other hand, it was a muted expectation already coming in from the street, but they managed to do slightly better than that muted expectations. But overall expectation is muted, so we're seeing a bit of a decline coming in for the stock there. Apart from that, capex stories, we have L&T as well as BHEL, which reported their numbers. For L&T, the management expects to beat the 10% order book growth guidance given at the beginning of FY26. BHEL also reported a strong Q2 number this time, led by margins as well as profitability, and slight bit of an improvement in terms of execution is what one has started seeing in terms of revenue. Earnings disappointment that came in from Ixigo as well as LIC Housing Finance. So those two stocks were down and out in today's trading session. Apart from that, we saw Nifty drags coming in, and top Nifty drags came in from the Pharma pack. So Cipla, that's the stock that is also was under pressure today, and this mainly came in after Umang Vohra said that he will not be seeking reappointment as the MD and CEO, and a new CEO and MD will be appointed, who is Ashin Gupta. Dr. Reddy's, that was also under pressure, received a notice of non-compliance from Canada drug regulator. This was for semaglutide, and that is why the stock was under pressure. Lastly, we had Vodafone Idea Industars that were also in focus and under pressure today after the Supreme Court order created some bit of an uncertainty in terms of over the quantum of relief that one would receive from these dues. So because of that, these two stocks were also under pressure.
Okay, all right. Thanks very much for that, Vinny. Yes, a lot of stocks in focus in today's trading session. Let's go across to our guest. Ambareesh Baliga joins in to discuss what he thinks of today's trading session. We have Somil Mehta joining in as well. Afternoon, gentlemen. Well, Ambareesh, I'll come to you. It was a day where we've, slipped in trade. We've ended below that 25,900 mark. What's your sense in terms of where exactly the range could be?
The markets are again finding it a bit difficult to cross the 26,000 levels quite decisively. But then at least now it's being supported by the earnings. Thankfully, the expectations were low. So whatever numbers are coming out, most of the numbers are better than expected. I think the next big trigger for the markets would be the US-India trade treaty. And at least I'm expecting that to happen before the end of November. I think that could be the trigger for the markets to move beyond the earlier highs which we had seen and more towards 26,500 plus levels. Till then, I think markets could be on the lower side, possibly about 25,600, 700 on the lower side. On the higher side, we'll see that 26,000, 26,100 will be the sort of a resistance for the market. So it'll be in like a narrow band, but could be volatile.
Okay, well, Ambareesh, we understand that completely. But, the entire pharma pack was in focus today. First, we saw the results of Cipla and then Dr. Reddy. Setback coming in as far as the Canadian market was concerned. Ekta, you were looking at Cipla quite closely. Some management rejig as well over there.
Yes, absolutely. The numbers were largely in line for Cipla this quarter. So, for example, the US market recorded $233 million in terms of sales, which was largely in line with estimates. India was up around 7%, so no surprises which came in there. And margins were in line at around 25 to 26%. But the stock sold off as Umang Vohra is not looking to seek a reappointment as MD and CEO and will be there till his term ends in March 31st, 2026. Remember that he has been with Cipla since 2015. He took over as global head since 2016. Now, Achin Gupta, who's the global chief operating officer, will now be the MD and the global CEO going forward. He has been with Cipla since 2005. Now, in terms of a couple of key parameters, the way the stock has performed since Umang Vohra, in fact, took over, the stock is up 1.65 times. We have the margins, which have expanded from 17 to 26%, EPS, which has gone from 12.5 to around 65 odd rupees. What he has indicated to investors is that he's completed what he set out to do in the past 10 years. The management of Cipla is completely professional now, so hence there is no vacuum and Cipla has enough talent at the top. And when it comes to important developments such as, the agreement that they've signed with Eli Lilly on Mounjaro, he said that it's not too much that they can speak about on the agreement. It's a trusted partnership on Mounjaro. Cipla will supplement Eli Lilly's sales and margins will be similar to earlier arrangements with Eli Lilly, but they do see Mounjaro as superior to semaglutide. We did talk to the management. Listen in to what Mr. Umang Vohra had to say.
The task I had set out to do through my 2 terms is achieved, and Cipla is now in good hands of the rest of the management team and Achin to take this forward. I'm not going to retire, but my own view on that is that we probably should not retire till we are 65. The organization today is truly run by professionals. The promoter insight and guidance is always there. The board takes a very active role.
Okay, well, that's the management of Cipla. We have Somil Mehta joining into this conversation as well. Well, Somil, it was quite a surprise to hear Umang Vohra exiting Cipla. What are your thoughts, and would you buy the stock at these levels?
Cipla has been doing good in the medium-term outlook, making high tops, high bottom. But in the last couple of weeks, we've seen very sharp moves in Cipla and correcting very sharply towards 200 daily moving average. I think the next support here is 1450, 1460 levels. And I'll be a buyer because overall the trend is positive. Every time monthly lows have not broken. So I'll be a buyer around 1450, 1460 levels for a target of 1650, 1700 levels in the medium-term outlook.
Okay, all right. So that's on the technical call for Cipla. Well, the other stock which was in focus was Dr. Reddy's. Now, the reason why Dr. Reddy's was in focus was because they received a notice of non-compliance from the Canadian regulator when it came to semaglutide or Ozempic, generic, which is a drug which is being looked at very closely for Dr. Reddy's as an opportunity. So now the launch itself is going to be delayed for some time based on the fact that they would have some kind of issues. What the management has said is that, the Canadian market is definitely going to be much more competitive than it was earlier anticipated. Remember, it's going generic in Jan of 2026, so it will be something that the street will be watching quite closely. And analysts have indicated that it will be a market where the permutation and combination for when Dr. Reddy's launches, which could be around 5 to 12 months in terms of a delay, and the number of competitors will determine how well Dr. Reddy's then does. The street right now is still anticipating around $100 million in terms of sales from this drug, approximately in FY27 from the Canadian market. So it will be, Dr. Reddy's was in focus on account of this news.
Not only Dr. Reddy, some of the suppliers for Dr. Reddy are named like a Shaili Engineering. That particular stock too took a bit of a knock on the back of this particular development. Well, Ambareesh, coming to you, your thoughts, on the pharma space, especially on Dr. Reddy. Would you continue to be a believer at the current levels?
Yeah, absolutely. Because whatever has come is surely a negative from a short-term angle. I'm quite sure they'll set it right and will be back, with the product in the Canadian market. So, because of this, we could see possibly a further correction to levels of about 1150 or possibly 1125. But I think it's a good opportunity to buy this from a longer-term perspective. I still have a price target of closer to about 1450 to 1480 for this stock. So if it comes to 1150 levels, I think it should be bought.
Okay, thank you so much, Ambareesh. Well, the shares of Vodafone Idea slipped after the Supreme Court's written order on the telecom company's additional adjusted gross revenue plea. Sources tell CNBC TV18 that the telecom department is studying Supreme Court's orders. Earlier today, our colleague Ashmit Kumar filed this report. Let's take a look.
Well, the Supreme Court uploaded its order on Vodafone Idea's petition last evening, and importantly, there are two key clarifications that the Supreme Court has given in this order. On one hand, the Supreme Court says that, look, this is a policy matter. It does not want to intervene. The DOT should have the freedom and the flexibility to go about resolving this AGR issue. But in the same breath, in the same order, the Supreme Court also says that Vodafone Idea itself is only seeking relief with respect to additional AGR, which is about 9,400 crore rupees, pales in comparison to the much larger demand that Vodafone Idea is looking at, which is over 83,000 crore rupees as of March of 2025. Not just that, the Supreme Court also gives the clarity that it is giving this relief order only with respect to Vodafone Idea, given the unique facts and circumstances. Now, this is something that we've reached out to the DOT on, to the government on, and senior officials. What they're telling us is that they've only just received the order, and while the order is brief, it's only about 3.5 pages, they feel the need for seeking a legal opinion on this matter. Again, for asking clarity on these very questions. Can the DOT grant relief only with respect to additional AGR? Can the DOT consider granting relief beyond the additional AGR onto the much larger AGR demand that the sector is looking at? And number three, can it even be a sector-wide relief, or does it have to be pointed and specific to Vodafone Idea? So key questions that the government officials are telling us they now need a legal opinion on.
Well, thank you so much, Ashmit, for joining us and giving us the details of this important order. And it had an impact both on Vodafone Idea as well as on the shares of Industar. Well, the shares of L&T as well as BHEL gained after reporting their Q2 numbers. Well, looking at the numbers, first up, what we look at is L&T. L&T, while the numbers were a bit of a miss to what exactly the street was anticipating, it's a miss to the CNBC poll looking at the P&L side. But the management indicated that, number one, monsoon impacted execution, unseasonal rains this time around, margins were impacted by legacy orders, and also the management indicated that going forward, that the newer orders in the order book will actually come, start getting executed, which is why they expect the margins to improve. Along with that, the order inflow guidance that the management had given at the start of the year of 10% is something that they expect to go ahead and beat or exceed. So that is something that the street clearly liked. The core E&C margin is at 7.8%, up 20 basis points on a year-on-year basis. Order prospect pipeline very, very strong. And along with that, the important thing, especially when it comes to L&T, is the fact that the company, with the results, actually has mentioned that core margins is something that is still a work in progress. They'd given a target of 8.5. That is something that they may miss. But multiple orders, multiple opportunities that the company has said, both in West Asia as well as in Europe, that is something that the street clearly likes. Now, moving on to BHEL. BHEL, very healthy performance. When you're looking at the numbers, it was a clean beat to the CNBC TV18 estimates. Improved execution, improved margin performance, order book at the current rate is very strong. Analysts have highlighted that this may be the peak, especially in terms of order inflow. But despite that, the street clearly liked, and this stock ended higher by over 6.5%. Well, Somil, if you've had a chance to look at the charts of both L&T as well as BHEL at current levels, do you see further strength? L&T, especially even going into the results, was quite strong.
BHEL would be my pick. Definitely. A small triangle pattern has broken on the upside. Great setup for a short to medium term trend to resume. I think the next target would be 272 in the very short term, and the next target in the medium term outlook would be 290. But I'll be expecting this trend to continue even above 290 levels, because now it has started making high tops, high bottom on the higher time frame, which is monthly charts, and 200 daily moving average will become a very crucial level now to watch out for in BHEL. 235 is the level which I'm not expecting this stock to break on the downside.
Ambareesh, what would your view be on a couple of these stocks? Which one has stood out for you in terms of earnings within the capital goods space?
In fact, Larsen Toubro has been my pick for a long time. And look at the execution. I mean, forget the monsoon issue which was there. But overall, if you see longer term, execution hasn't been an issue for L&T. They have proven time and again. And now we are talking of margins, going up over the next couple of quarters, which the management has said. And look at the order book positions, as robust as possible. So L&T clearly is the pick for a long term. I think in the short to medium term, we should see levels of about 4,400 or so. But then if you're talking of longer term, I think 18 to 20% CAGR is surely there.
Ambareesh, with the commentary that the management gave, the other thing that's happened today is a significant Europe foray. I don't know if you've had a chance to look at that. And along with that, they're talking about entering the EMS space. Would you be a little worried, if you were an investor in a lot of these EMS stocks, especially which are trading at elevated valuations?
Yeah, surely I think there'll be a huge amount of competition coming in if they're getting into that. So I've not really looked at that in too much of detail. But yes, if they get into that, yes, you'll have the margins again going up further.
Okay. All right, Ambareesh as well as Somil, thanks very much for joining in and taking us through all of those stocks as well as the markets that were in focus today. We'll take a short break, but we'll get you all of the top corporate voices along with the key market events to watch out for on the other side of Markets Forward. Stay tuned.
Welcome back to Markets Forward. Well, now on to the top corporate voices of the day. The management of Sagility delivers in the second quarter. The management told CNBC TV18 that looking at Q2, it has raised its FY26 revenue growth guidance to 21% from the earlier 20%. The second half of FY26 is expected to be as strong as the first, with a positive revision in the EBITDA margin guidance as well. The company added that it is actively pursuing M&A opportunities at attractive valuations. Sagility also highlighted that over 99% of US employees are green card holders, and H-1B visa rules have not had a significant impact.
Next up is Happiest Minds. The company is on track for double-digit revenue growth in FY26. The management expects double-digit revenue growth for the next 4 years, revised from the earlier guidance of 3 years. Management expects $8 million in terms of revenue from its generative AI business services in FY26, having already achieved $4 million in the first half. It anticipates that this business will contribute $50 to $60 million over the next 3 to 4 years.
In a CNBC TV18 exclusive, Radico Khaitan expects over 20% volume growth in FY26, with its prestige and above segment also projected to grow more than 20% during the same period. The company's luxury portfolio is set to cross 500 crore, while margins, which have already improved by 20 basis points this year, are targeted to expand by another 125 basis points annually over the next 2 years.
Okay, and on that note, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.